Hello and welcome back. Francois Savary, hello.
Hello, Mark.
Thank you for joining us. Wednesday, the 2nd of April, is the big day as far as the markets are concerned this week. It may be a bit bumpy. President Trump has announced that as the day when he will be announcing the tariffs that he's going to be imposing on absolutely everybody. We're going to be talking about that first of all. After that, I'd like to look at US markets, especially the NASDAQ, and after that, gold. Liberation Day, 2nd of April. Given that the US is the world's biggest trade deficit nation, aren't tariffs just a no-brainer? Isn't this a win-win situation for the US, even if there is reciprocality from the other nations? Surely the other nations are just on a hiding to nothing.
Okay. At the end of the day, I would completely invert your question. It's a lose-lose situation. At the end of the day, the problem you can try to put tariffs and gain taxes because this is the aim of the Trump administration. They know that they have a huge fiscal deficit that is not going very well for many, many years because the overspending has been so big that it's very, very difficult to try to change that. So that their argument is that they are going through the tariffs. They are going to have taxes. Those taxes are going to help to finance the budget deficit. They are going to get reindustrialization and etc. Economic theory is absolutely not going in favor of such arguments. It can be very dangerous because what you need to have in mind, and this is the reason why the market is reacting so poorly for the last 6 weeks in terms of Donald Trump gyrations concerning tariff, is the fact that you are weighing on economic activity. You are destroying the supply chain. You are adding to a system in which there is some disequilibrium. You are adding the risk that you will face stagflation. This is the reason, for example, why Friday you have such a poor behavior of equity market. It's because suddenly you had inflation going up and economic activity going down, which is absolutely a lose-lose situation for everybody.
Okay, coming to markets now. Some weeks ago, you cautioned against jumping back into the market so soon. We're back on those lows, which are give or take 10% down from recent highs. Do you think the market is now psychologically it's in a state of risk off? Are you looking to find areas to buy in and at levels to buy at? Or are you more looking to protect your portfolio?
Okay. The move that we are considering, and to tell you the truth, is do we need to go further in reducing equity exposure in our accounts? That's the move that we have in mind. So it answers your question. Your question is yes, you have the feeling that there is some risk-off mood that is in place from now. Look at what is happening with gold prices. Gold prices have moved. I mean, they went up significantly. And if there is an asset class that is telling you that there is some risk-off mood on the market, it's really the price of gold. Look at what happened with the 10-year Treasury bond on Friday. It came down 11 basis points. This is a huge move in one day. So yes, you have the condition to see some risk-off. It's very, very difficult. Again, to make this decision, the decision I said, do you need to reduce your equity exposure even further? Because at the end of the day, it's very policy induced. You have a lot of declaration. You have a lot of duration by the Trump administration. So people are, in a way, they are like a boxer on the ring and they are asking themselves, what are they saying? What do they really want to do? So you have a lot of uncertainties. So that's the big question. Would it be necessary to consider that we have reached the low level? I would tend to disagree. There is a risk that we will go back to 5,300 on the S&P 500 in the coming days. And I think that there is still no way to rush into the equity market. And you are right. Your question that you need to ask, do you stick with your position, with your guns, or do you want to reduce further your equity exposure in the short term? I would say that at the end of the day, and this is one of the messages that we gave in the course of the last few months, is to try to diversify your portfolio out of the Magnificent Seven. The Magnificent Seven are suffering a lot in this correction. And I think that was the right call to say, okay, try to get more defensive stocks in your portfolio, try to be exposed to healthcare, try to be exposed to solid growth companies in the future. So I think that you need to stick with this kind of attitude. As you said, I think that 5,300 on the S&P 500 is something that we could see. This is maybe a buying opportunity. I don't know yet. I want to see what the economic number will be and what is the reality of this stagflation risk in the economy. So you still need to be very cautious in the short term. Look for defensive stocks. I think it's too early yet to get into the techno stock and the Magnificent Seven in particular. And I think that financial remain an attractive proposal. That's what I would tend to look at in the coming weeks.